Imagine you own a stock, you wake up, check the news, and see a headline. CEO sells $50 million worth of shares. Your stomach drops, you panic, you think, he knows something. The ship is sinking. You hit the sell button to save what's left of your money, and then the stock goes up. Why? Because you fell for the oldest trick in the book. You mistook noise for signal. Most insider selling is meaningless. CEOs buy yachts. They pay for divorces. They send kids to Harvard. They have to sell stock to live. But insider buying, that is a different story. There is a way to legally spy on the CEO, the CFO, and the board of directors. There is a way to see exactly when they are betting their own money on their own stock. Today, we are going to learn the difference between a CEO buying a beach house and a CEO fleeing a crime scene. We are going to learn the cluster buy method. Let's visualize the equation. The first rule of insider trading is asymmetry. Peter Lynch, the legendary fund manager of the Magellan Fund, gave us the golden rule. Insiders might sell their shares for any number of reasons, but they buy them for only one. They think the price will rise. Think about it. If the CEO sells, maybe he just needs cash. It tells you nothing about the business. But if the CEO reaches into his own pocket and buys $1 million of stock on the open market, he isn't doing that for charity. He isn't doing it to support the price. He is doing it because he is greedy. He sees the internal data. He sees the sales pipeline. He knows the stock is undervalued, and he wants to make a profit. Historically, stocks with heavy insider buying outperform the market by significant margins. Some studies show an alpha of 4% to 20%. This is the only legal cheat code left in the market. So, how do we find this data? By law, every time an insider trades, they must file SEC Form 4 within 2 business days. But don't read the SEC website. It looks like it was built in 1995. We use a tool called OpenInsider.com. Let me show you how to set up the spyglass. Look at the filters at the top. First, we check purchase. We don't care about sales. We want to see green rows. Next, we look at the insider title column. We want officers, not just directors. A director might be a celebrity on the board, like a retired athlete who knows nothing about the day-to-day. But the CFO, they know the books better than God. If the CFO is buying, you stop what you are doing and pay attention. And here is a pro tip. Look at the filing date versus the trade date. Did they trade on Monday, but wait until Friday night at 4:59 p.m. to file the form? That is called burying the news. If they buy huge amounts and file immediately, they want you to know. If they file late on a Friday, they might be trying to hide their tracks. Always check the timestamp. Not all buys are created equal. You have to know the difference between a grant and a purchase. Sometimes a company gives the CEO shares as a bonus. This shows up as a transaction, but it cost them $0. That is not a signal. That is just a paycheck. We are looking for open market purchases. This means the insider took cash out of their own bank account, logged into a brokerage, and bought shares at the market price, just like you. That is skin in the game. If they lose real money. On OpenInsider, look for the transaction code P purchase. Avoid a grant or M option exercise. An option exercise code M usually means they bought the stock at a massive discount because of an old contract. It doesn't mean they are bullish today. We want to see the P. We want to see them betting the mortgage. Now, let's look for the strongest signal in finance. The cluster buy, 1 insider buying, is interesting. Maybe he's just optimistic, but 3 insiders buying on the same day. That is a conspiracy. Research shows that cluster trades where 3 or more insiders buy simultaneously are significantly more predictive of future returns. Look at this data from January 30th, 2026. The ticker is NRIM, NRIM Bancorp. Look at the insider name column. It's not just one person. We see 4 different insiders buying on the same day. This is a bank. Banks are conservative. Bankers do not like losing money. When 4 bankers agree that their stock is too cheap at $23.94, that is a massive signal of internal confidence. They are essentially screaming, the market is wrong. But if you look closer at the data, you see something even bigger. It's not just NRIM. Look at the row 4 ALLY Ally Financial on January 28th. 2 insiders buying. Look at LOB Live Oak Bank shares on January 28th. 2 insiders buying. What do all 3 of these have in common? They are all banks. This is what we call a sector cluster. When insiders at different companies in the same industry all start buying at the exact same time, it is a macro signal. It means the people running the banking system think the banking sector has bottomed. This is more powerful than a single stock pick. This is an entire industry giving you a green light. Here is a mistake beginners make. They see a massive buy $50 million and get excited. But then they realize it was a 10% owner. Look at the filter section. A 10% owner is often a hedge fund or an investment firm that owns a big chunk of the company. When they buy, it might just be asset allocation. Maybe they needed to rebalance a portfolio. Maybe an algorithm did it. They do not run the company. They do not see the daily sales report. Officers, CEOs, CFOs, COOs see the secrets. 10% owners just see the spreadsheet. Always filter out the 10% owners if you want the pure signal. You want the operator, not the allocator. Sometimes it's not about how many people buy, but how much they buy. Look at this entry for StreamX Corp STEX from January 27, 2026. The stock is trading at only $3.02. It's a small cap. But look at the value column. $3,385,298. Three insiders just dropped over $3.3 million on a penny stock. But here is the salary test. If Bill Gates buys $1 million of Microsoft, it means nothing. That is 0.001% of his net worth. It's like buying a coffee. But if the CEO of a small company who makes $200,000 a year buys $1 million of stock, he just mortgaged his house? He just pushed all in. That is the signal you are looking for. In the case of STEX, $3.3 million is a massive commitment for a small-cap management team. That is high conviction. Before you rush to buy, you need to understand timing. Insiders are value investors. They buy when the stock is beaten down. They buy when it's ugly. Often, they are early. You might see a cluster buy, and the stock might drop another 10% next week. Don't panic. Insiders aren't day trading. They are looking at the next 6 to 12 months. The strategy isn't buy immediately. The strategy is put it on the watch list. Wait for the chart to stabilize. Let the technicals confirm the insider signal. You don't have to catch the falling knife just because the CEO did. However, there is a massive trap. You might look at a chart and see the CEO selling stock every single month for 2 years. You panic. He's dumping shares. Stop. You need to check for Rule 10b-5-1. This is a pre-scheduled automated selling plan. The CEO set this up 6 months ago to sell 5,000 shares a month to pay for his lifestyle. He has no control over it. It executes automatically, regardless of whether the stock is up or down. If you see a sale marked 10b-5-1 in the footnotes, ignore it. It is noise. It is a robot. If you sell because a robot sold, you are the sucker at the poker table. So, here is the playbook. 1. Ignore the selling. 90% of it is just life happening or robots. 2. Respect the buying, especially if it is the CFO using their own cash. 3. Worship the cluster. If 3 insiders buy at once like the banks, or if they drop millions like $STEX, do your homework immediately. The insiders are telling you what they think of their own company. All you have to do is listen. Go check OpenInsider for your favorite stock and tell me, are they buying or bailing? Let me know in the comments. And if you enjoyed this tip, check out the KOFI link in the description. Remember, this is not financial advice. You're watching Stock Teller, where every ticker has a tail.